record. Morning, Derek.
Morning, Kevin. How are you?
I'm good. This is an interview series where Derek and I chat about topics in economics, markets, and for today's discussion, and by the way, we call this series Rippin' It because Derek's last name is Rip, and everybody that knows him well ends up calling him Rip because that's just the way that goes. We're going to be talking about a financial planning topic that is whether or not to buy a vacation rental property. Have you ever thought about buying a vacation rental, Rip, yourself?
I have, especially after going on vacation and having a good time with the family, and you get back home and you start reminiscing about wouldn't it be nice if we could have a place, name your favorite location, right? That we could just go out there and spend time and have all those great family memories. So that emotional aspect of a vacation is definitely appealing, and then most times, fortunately, the financial implications set in, right? So we start, you'd start thinking about, well, what would that actually take? And a lot of times, what you figure out is that it does not make sense. But yeah, I'm human. I think just like a lot of other clients, in terms of you have a great time and think that maybe that's something that you would want to add to your portfolio.
This just happened to me, so I'm very sympathetic to the notion that it might be a good idea to buy a vacation rental. I spent a little over a week in Durango, Colorado in August, and I did not really want to come home after that trip. And of course, while you're there, you're looking around thinking, oh man, can you imagine spending maybe 2-3 weeks a year here, this beautiful place with all these things to do where it's not nearly as hot as Texas. And I thought about all those things. But then I thought about some of the rest of it. As the owner of the property, I think we saw him twice during the week, wants to replace stolen wine glasses from the previous group, and another to deliver some extra towels. And I thought, I really don't want to do that. I really don't want to be that guy having to fiddle around with his house, particularly from 800 miles away. So obviously you can hire a management company. That's another factor. But my understanding is management companies can cost 15 to 25% of the revenue, particularly if you're asking them to market the property and generate a steady stream of renters. And you may pay that to Airbnb, or you may pay that to VRBO, or you could pay that to the local management company.
Right. Yeah. And so those that quickly starts chewing into your profitability if you're paying 20 to 25% to a property management company. But definitely something to consider.
So I want to make it clear, people can afford vacation rental properties, and that's amazing. It's fantastic if they can afford it and do it and enjoy it. That's great. So I am not being critical of everybody who does this, nor am I saying it's not right for anybody. But what I think is important to discuss is what is the nature of it? What is the reality of buying a vacation rental property somewhere? And of course, this time of year, it is, what is it, late August? I'm losing track. I think it's late August right now.
Yes, that's right.
This is about the time when a lot of folks start asking us about this because they're also coming back from vacation. So I'm not being critical of any of those people because I understand. I feel the same way. I'm also interested, but what very few people ever come to me with is an estimate of the rental revenue throughout the year. Very few people have their head around that when they go into making these decisions. And of course, there's peak seasons, there's slow seasons, and beyond that, there are weather-related differences. If you're buying a place in Snowmass, or you name a ski resort, and there's no snow, you're not going to generate as much revenue. Or you could be in a coastal place that gets hit by a hurricane, and you'd be not only is your house damaged, but you could be out rental income for a couple of years. And it's not easy to gather that information, although I'd say it's probably easier than ever because you can use VRBO and other resources to estimate that revenue. But the last point I want to make on that is if your plan is being in that rental property during the most attractive periods for you personally, which might be middle of August, that might be the peak rental season. So you're losing out on the best revenue because you want to be there the times when everybody else does. Otherwise, you just bought a vacation rental property and you're not going to be able to use it. You got to go somewhere else. And that might defeat the purpose.
Yeah, and you touched on a couple really important points, which is, having a budget and knowing what you can afford, number one, right? I mean, before you pull the trigger on buying a property, you really should understand that, being realistic about your rental income. For all the reasons you mentioned, there could be, some seasonality there. There could be some weather-related events, et cetera. So, really getting your arms around there and just crunching the numbers. I think, we talk to clients about this is what's the true return on investment? And of course there's vacancies and there's repairs and there's true costs there that need to be considered. And it's not to say you shouldn't do it, but you should at least run the numbers because the numbers might surprise you, in terms of what that actually looks like.
Yeah, I think you should be prepared to have to subsidize the property out of your own household assets. Because if you're not renting it full time, there's almost no way you're covering all those costs, particularly if you have a mortgage and all the other hidden costs. These are some of the things I learned is you got to replace bedspreads and sheets and curtains and carpets and furniture and wine glasses. You've got to replace this stuff throughout the year. And it's hundreds of dollars, if not thousands of dollars. That's a cost that didn't really occur to me until I started staying in some of these places. So you've got to expect to have to subsidize it. So when people come to me and they ask about vacation rental properties, the first thing I like to do is try to figure this out. What can you afford to subsidize? And oftentimes the math has come in at, this is going to cost $20,000 to $40,000 a year potentially out of pocket. So that's cash flow that you would otherwise be potentially putting in a college fund or saving in some vehicle that is now going to expenses to operate this property. And some people can definitely afford that. Absolutely. And maybe you make it up on appreciation. That's possible. I don't know if I would exactly count on that. I don't think it's not true to say that all vacation areas have appreciation that is attractive, better than average, not necessarily even better than average, maybe below average. I think the rate of growth, if you buy a rental in Cedar Park, Texas, has probably a better chance of appreciating, or you named a suburb outside of an attractive city, probably has a better chance of appreciating than your average beach town, is my intuition. So I'm not sure you make it up on the appreciation. And for the places that are appreciating rapidly, like probably Breckenridge and all the places everybody's heard of, you have to pay such a premium to buy there that there's no way you'll make it up on cash flow. The rents just can't keep up with the premium you have to pay for that property. So in sum, I think you're looking at, you've got to expect a cash flow deficit. You're coming out of pocket for that. And the appreciation component, there will be some, but the odds of it making up for that are not terribly great. And you probably shouldn't consider this an investment asset that's going to keep pace with even the general stock market.
Yeah, I would agree with that. I think you look at it as a lifestyle asset. So, probably being a little bit more realistic, this may not be the best return on investment, especially if you want to use it more and you're renting it less, right? So it's a lifestyle asset that may work out, right? It may do great. 20 years from now, you look back and say, "Wow, this is really appreciated." But you really have to have the cash flow to support it on a yearly basis, because you're probably it's not gonna cash flow positive after all the expenses. You also have to think about protecting the investment, whether that's in the form of insurance or other legal entities. There's some cost involved with setup of those as well. But it's still, it still may be worth it. And I think really just, if you're able to determine what is the financial impact. So yes, there is opportunity cost. You may be better off doing some other things, but is it going to be potentially detrimental to your long-term success? And if the answer is no, you may still go ahead and do it because the lifestyle aspect of it may justify it. But I think the bottom line, if I could try to wrap it up, what we're saying is just go in understanding what this is, really trying to put your pencil to paper and understand what the numbers look like before just pulling the trigger and then having buyer's remorse, a year or two later. And a lot of times just, when you feel like this is, an investment that you want to make, just taking the time, take a couple of weeks to let it sink in, because you may change your mind in a month and decide, no, that sounded really good, but I'm kind of over that now, right?
I call this a cooling off period.
Yeah, that's right. So
Yeah.
I'm a fan of the cooling off period as well. And again, just trying to understand the implications. Again, not saying you should do it or shouldn't do it, but going in, you're really trying to understand what that looks like.
I've had conversations with clients over the years where they tell me that they've got this great property, maybe a beach property, and they love it and they rent it out and they make a lot of revenue on the property, but they find themselves going on vacation and spending the weekend at the Home Depot. And if they're anything like me, one Home Depot trip is always 3 Home Depot trips, because there's the screw that you missed that you needed, or the tool that you didn't pick up and you end up going back 2 or 3 times. And all of a sudden there's a Saturday on your vacation with your family in August. Now, I don't want to be too overly cynical about it, but I think that's a reality. When you own a property, you're concerned about maintaining it, and instead of being on vacation, you're in home maintenance mode. So I don't find that to be too terribly attractive when I'm on vacation. Here's the other thing about vacation properties I've noticed is the best rental for you may not be a place that you would pick on your own relative to your choices.
Right.
So you're in a place or a town that you want to be in, but the property, in order to optimize what you can afford as a rental, may not be a place that you particularly love compared to other places you just might be able to rent. So you get kind of stuck in between, where you have a property that's not really making you money, you're paying for it. It's not exactly the type of place you would choose to stay if you were just to rent there for a week necessarily. So you're kind of stuck in the middle. It's not a great investment, and it's not really great for fun. I think that's a risk that's probably not considered deeply enough.
Yeah, I would also say that, thinking about almost, becoming obliged or feeling obligated to going down and having to spend time at the property, to do the maintenance or to do some of those things, versus just seeing other places. That's one of the things that if you don't have a property, there's nothing stopping you from going around, travel the country, seeing a lot of different places, and then just enjoying yourself and going home at the end of that week. And so I think there's something to be said about not having that that obligation there to feel like, oh, now we've got to go down to the rental because we've got it, and we got to try to we want to justify the investment, et cetera. So I would consider that as well, having the flexibility and the freedom to go to other places.
Our friend Debbie Treminsky on another interview that we did recently compared buying a rental property. I think the comparison is to buying a boat, which is the best day of buying a vacation rental is the day you buy it, and the second best day is the day you get rid of it.
Right.
Much like I've heard people kind of joking about buying boats and other things like that. And that's from somebody who really understands the real estate investment business. But I don't want to be too negative. I think we should end on a positive. If somebody's really considered everything we've talked about and more and knows the numbers, and they can afford comfortably to put $20,000 or $30,000 of just pure cost into a vacation property, and maybe they really like the idea of going to the same place and they have their stuff and they're familiar with the area, and that's valuable, and I understand that. I can sympathize with that too. Then it can work out. It can work out. I think the most important thing is to distinguish between an investment and a cost. And these types of deals seem to be more like a cost than an investment.
Yeah, and if you're really looking for an investment, there are probably other properties that would actually be better investments that will cash flow positive, and still have appreciation as well. But it may not be the types of places that you want to go on vacation. Right. So just being able to distinguish between those is important.
Well, I think that's about all I can think of to say on the topic for now. But I will say I haven't completely abandoned the idea of finding a way to spend more time in Durango, Colorado. And I don't think it'll be a vacation rental, but the thought of being able to work somewhere else and work and play during the middle of the summer, leaving Texas, and the fact that we can use Zoom and all these tools, I got to believe a lot of people are giving serious consideration to extended vacations where they work for a couple, 2-3 weeks, because it's more possible now than it's ever been.
Well, it sounds like you may have an RV in your future. That might be one solution.
That will be an RV will be a topic for another day.
All right.
Thanks, Rip.
All right. Have a great day.
You too.